pence sterling.
Now for more on how that banking inquiry is affecting the markets.
Let's be joined by the Executive Director of Investor Relations company Bourse Communications, Rod North. Rod, lovely to see you.
Good morning.
Now, of course, all over the papers this morning is the bank inquiry.
It certainly is, and I think it was interesting to see how the market reacted yesterday, because I think there was some fairly significant concern, particularly for the major banks, that these reforms that were announced on Sunday may actually be a lot more onerous than they were. So it's always interesting to watch where the money goes, and certainly yesterday we saw all the major banks rise between sort of 1 and 1.5%. But against the backdrop of that, we also saw the smaller banks like Bendigo, Bank of Queensland, Bank of Adelaide all drop about 3%. So it's interesting to see where the market perceives, what reactions occur as a result of sort of things like exit fees and so forth, and what those things sort of impact on in terms of the revenue that can result for those companies. Because we can't forget the banks are listed companies. So I mean, this is perhaps one of the whole sort of root things in the whole inquiry, is that they're listed companies.
They're expected to perform.
They're expected to perform. That's right, against the backdrop of customers that have gone through a pretty tough period over the last few years, where they've seen rates rise quite incredibly, and also significant fees being sort of tapped on here, there and everywhere.
Now, shareholders, if not home loan customers, would welcome Cameron Klein's statement that the banks might be more aggressive in raising rates in the future.
Well, I think the concern about that is that the normal conformity has been that the banks have raised rates when the Reserve Bank have raised rates, and of course we've seen that come out of kilter in recent times, particularly with the November Reserve Bank board meeting, and of course it's this issue of whether the banks should be seen to be really doing the job of the Reserve Bank. And of course the other issue, of course, is that the banks are able to do that because they're in a very strong position, and perhaps that position doesn't dictate that the competition is there, because you wouldn't be necessarily saying that you can do that unless you felt you're in a very strong position. This is, I think, the main reason why we do need to see some more competition come into the sector, and see that other pillar developed.
Now, the NAB quarterly survey is out today and gives us a sense of how things are travelling in the economy.
Yes, that will be very interesting to watch. The business survey that comes out monthly will reflect the November figures, and I think there's some expectation there that because, again, the rates have impacted quite significantly on businesses, I think there's some expectation perhaps that we'll see that figure sort of come down for that period in November.
Now we have the trading year about to wrap up. 2011 is shaping up as the year of the IPO.
Yes, it's interesting. We've just seen a very late rush of companies wanting to list before the end of this year. 32 are earmarked to list between now and the 31st of December. So it's going to be very interesting just to see how the ASX is going to get all those companies lined up. I think 4 listed yesterday, and there's more scheduled today, and there's others sort of scrambling into the next few weeks. So we haven't seen a lot of IPOs in 2010 compared to, say, 2007. We'll go back a few years, we saw over 200 companies list. We've seen about sort of 40 lists this year. So I think that bodes well for the market,
for where the market's going
into 2011, yes.
In time for Christmas stockings, but
that's right, you can buy some shares. A lot of them are mining and resource shares, I've got to say. So,
oh, that's not bad. I wouldn't mind a few of them in my stocking.
Not too many penny dreadfuls.
As long as they find something, that's always a good thing.
And the market hasn't moved. I mean, it's just been a year of stagnation.
Yes, we've seen really the market where it was sort of 12 months ago, unless we get a late rush. I mean, there's some expectation, if we see some good news out of the US in the next few days, that we could get to 5,000 before the end of the calendar year, but we'll have to keep our fingers crossed on that one.
And the betting's on.
Absolutely. Another cake, I think.
Thanks, Rod.
Thank you.